Welcome back. You're watching Business Week on Arise News. Joining me now to review some of this week's business stories is Gaimin Nonyane. She's a principal economist and investment strategist at UK-based K Frontiers Limited, an experienced economic consultant with extensive experience in emerging and frontier markets. She holds a master's degree in international economics and policy. Thank you for joining me this morning, Gaimin. Great to have you on the show.
Thanks for having me.
So I wanted to start with the story of the IMF seeing 3% global economic growth over the last 5 years. I mean, this came on the back of the World Bank IMF spring meetings. So the economy is expected to grow by 3%, but perhaps not as bullish as we originally thought the bank and the IMF would be. What is your take on this prediction?
Yeah, well, I believe that it's really interesting data. It just shows how challenging the medium-term outlook is likely to be over the next 5 years. We've just had a pandemic, and then we had, just as economies were recovering from that, then we had the Russia-Ukraine war, which has simply just reversed most of the gains that economies have been making since the pandemic. And so it's going to be another painful 5 years for most economies. We're already seeing advanced economies such as the US, the euro area, all showing signs of weakening or downturn. In the US alone, you've got retail sales slowing down. You've got the manufacturing PMI remaining below 50, which shows that factory activity remains contractionary. And the same thing is happening across the Atlantic to the euro area. So, and all this has come about because of the tightening in interest rates that we've seen across major central banks, across major markets. And on top of that, you've still got the fallout from the pandemic, which is affecting supply chains, creating supply chain challenges. Whilst it's easing, it still remains an issue and challenges for most economies, businesses, governments. Input cost remains high. So I'm afraid to say that whilst we're likely to see some growth, countries will still be growing below their potential, their medium-term potential. And what that means is that it's unlikely that they'll be able to play catch-up, so we'll still be seeing fiscal problems. That will be creating debt problems for some of, especially low-income countries. And in advanced countries, it's going to be very painful in consumer spending, for businesses to expand investments. So I'm afraid it's not a very, even though it's not a very bright picture, it's going to be a bit painful for some time.
Yes, indeed. And quite the laundry list there of potential global economic challenges. Interestingly, the IMF and World Bank haven't explicitly talked about a recession, but over in the US, the Fed has actually warned of a mild recession on the back of some of the rumbles we saw in financial services with some of the collapse of banks in that country. But given this concern and worry over inflation, do you still see considerable prospects of raising interest rates further by the US Fed and other central banks around the world?
Well, let's put things in perspective. The interest rate hikes have come about because of inflation. Of course, we know that inflation is bad for every economy. No policymaker wants to accommodate any high inflation environment. And so I think that the US Fed is on the right track in terms of raising interest rates in order to bring down inflation and help to meet their 2% inflation targets rate. But bearing that, we've seen that the pace of the rate hike has actually slowed down. They were late last year, we were seeing 50 basis points hike, but recently we've seen a 25 basis point hike, which seems to show that they're now concerned about the impact that the high interest rate is having on the economy and on consumer spending, etc., and businesses. So given that we're already seeing economic indicators and high frequency indicators showing a slowdown, as I mentioned, the ISM, manufacturing, PMI, retail sales, etc., and housing costs, housing and building permits, I don't think that we'll see an aggressive rate hike as we saw last year, late last year. I think the pace is likely to slow, and then we're likely to see perhaps a pause in interest rates for the coming months or the remainder of the year. I mean, I have read some reports that there might be a rate cut by the end of this year, but I see that as unlikely to happen. I mean, the global challenges are still very, very much pronounced. In the global economy, especially with the uncertainty over the Russia-Ukraine crisis, the geopolitical risk and impact of that on the economy, climate change effects, etc., which are also having negative consequences for food prices. So I believe that the aggressive tightening is likely to cease, and we're likely to see a slower pace of rate hike and then a pause towards the end of the year.
Yes, indeed. That would be very interesting to watch. So I want to scoot over to China now. China saw a surge, as has been described, in exports in the last quarter, the first quarter of this year in March, at the end of March. And, you know, economists have cautioned that the uptick may just be a result of the adjustments post-COVID. But, you know, what is really driving this, and given the global concerns around inflation, a surge in demand in China is not necessarily the best indicator, is it? What are your thoughts?
No, certainly it's not. Well, I would say that, you know, the surge in demand has come from, it's just one data point. So you can't really make any conclusive statement from that. But if you look at previous data, you see that this has come as following months of declines, consecutive declines in exports. So it shows that there's something else happening. It's not to say that, okay, well, the global economy is now global demand is now it's now really recovering robustly, and so that's driving all these exports from China. It's mainly to do with a backlog, I would say, as you mentioned in previously, that supplies. We've now seen the end of the zero policy, COVID policy in China, and so as a result of that, we're seeing suppliers are now rushing to fulfill the orders. But if you look at China's economy as a whole, on the flip side, if you look at imports, you see that imports have actually contracted, and for the quarter alone, China's imports contracted by about nearly 8%. So that means that the economy on its own is not doing well. Domestic demand remains very weak. And in terms of exports for the rest of the global economy, we need China to be strong or to recover robustly for the rest of the economy to grow and recover in a more sustainable manner. Bear in mind that just before the pandemic, for the 10 years prior to the pandemic, China was actually contributing about 30% of GDP, to global GDP. And so now it's really dropped remarkably just because of the weakening in the Chinese economy. So we need China to grow robustly for us to have a more sustainable export market and be able to say that, okay, the rest of the world, demand from the rest of the world is actually picking up as strongly as it should be.
Yes.
So there's a lot of uncertainty there.
Yes, indeed. And I think I have just about a minute just to take your thoughts on this report by the Cocoa Farmer Associations of Nigeria about the low funding that has gone into that sector. What is your broad take on what is hindering cocoa production in Nigeria and perhaps the rest of the region? Very quickly.
It's simply funding and climate change effects. But I believe that there should be extra funding intervention, targeted support in terms of subsidy and loans to farmers. And then, there's the margins, as the margins are really low for in the agricultural space in Nigeria. I mean, for the farmers, and the high input costs as well. Fertilizer costs have really increased substantially, and this is having a major negative impact in the farming industry, in the agricultural industry in Nigeria.
Yeah.
So there's a need for more allocation of funding for farmers in Nigeria.
Thank you very much. Very insightful conversation there with Gaimin Nonyane, Principal Economist and Investment Strategist at K Frontiers Limited. Thank you so much for joining us, Gaimin. Great to have you on the show.